So, you're welcome, everybody. I wrote something in the group that you should not allow anybody to deceive you. That trading is all about trend. All right? Trading is all about trend. Either it is downtrend, or it is uptrend, or the market is ranging. That's all. Trading is not more than this. But the problem is that if it's trending down or it's trending up, at what point should you get involved in the up? If it's trending bearish, at what point should you get involved in the bearish market? That is where the difference is. Okay? And I used to say this, that there's nobody anywhere in the world that you will ask the direction of the market that he will not be able to tell you. There's no trader. Say, is the market going up? If it's yes, he will tell you. If the market's bearish, if yes, it is bearish, he will also tell you. All right? So,
good evening, sir.
Yeah, good evening. Welcome. So, there's nobody like that that will not be able to tell you if market is bullish, you can tell you it's bullish. If market is bearish, can tell you market is bearish. But at what point should you get involved in the bullish market? At what point should you get involved in the bearish market? Ladies and gentlemen, this is where the difference is. That's the problem. But in all, we are trading trend. Irrespective of the strategy you tell me you are using, we are trading a trending market. That is why I named my course Trend Mastery Course. Trend Mastery Course. Because everything you do there is trend analysis. Everything that is not bothered on trend analysis has to do with identifying the right position to get involved in the trading, in the trade. The right position to get involved in the trade. Do you understand what I'm saying now? So now, time frame application is relative. Okay, it's relative. But if you see me, well, maybe you may not see that, because at the point of doing all this analysis, you may not see that. But the outcome of my analysis, I can drop it. I always drop it for you on the chart. I'll try to look at the trend, how it's progressing. Okay? Here, you will need a thorough knowledge of what do we call it? Structure mapping. I will draw something like this. Anyone that is qualified, when I see break of structure, I see weak demand created, it take it, I will mark it. Okay? Break of structure happening here. Okay? I will mark it. I will always mark it. I'll just mark them down. I'll mark them down. Okay? If I mark them down like this, take note of where you have break of structure. Tactically, I have drawn structure mapping here. But I have not told you that I have mapped my structure. If I don't tell you I have mapped my structure, you won't know. But I won't be right. I won't be putting it there. This one, taking this one, this in this one. No. Because I already understand what structure mapping is all about. Okay? And I have used the knowledge of structure mapping to map the structure on the higher time frame. What am I doing? Trend analysis. I am analyzing the trend. Okay, now, at each point that you are having a pullback, you want that pullback to come to a premium level. This is a bearish market. You want it to come to an acceptable premium level before you look for sell. Okay? But sometimes, remember this is higher time frame. We are taking this to be a higher time frame for a day trader. And of course, you know, I am an unrepentant day trader. I am unrepentant day trader. Now, sometimes retracement comes to the middle and develop liquidity. Hear me very well. Sometimes retracement, for instance, this one, you have break of structure, which means this supply is very good. If you measure it from here, from this level to this level, where does retracement come to? Can you see? Where does retracement come to? Retracement has come to what? Less than what? Less than 75 to 90. Is somebody hearing me now?
Yes, sir.
Correct.
Yes, sir.
So now, retracement comes to less than 75 to 90, but above 50. But then, what do you notice at that level? You see liquidity. We have seen liquidity. Who does not see this liquidity here? Is there anybody here who does not see it? This liquidity here. What made me to say this is liquidity? Can anybody tell me? What made me to see this as liquidity?
Sharp up, sharp down.
Sharp up, sharp down. No, sharp up is only one answer. Sharp up, sharp down.
Yeah.
Can you see? Market comes. You see it? Boom, boom. This is liquidity. This is liquidity. So if this liquidity was not formed here, I would have been waiting for price to come to this level. Right? To this level. Before I look for the liquidity. And before I can even consider selling. Okay? But right now, we have not pushed to the right fib level, and market has developed liquidity on this buyer's time frame. So at this point in time, I am no longer interested in the what? In the buy. I am interested only in the sell. Why? Do you see what I wrote here? Can you see that I did not write this one here right now? I wrote it when I was doing analysis. What did I write? Can anybody read it? Can you guess what is here? Premium bearish. Yes. Premium bearish. This is the only condition. This is the only condition that will suffice in a bearish market that will make you to have a bearish bias. For you to start looking for sell opportunity. Premium bearish. It is a bearish market, but right now we are the premium because we have seen liquidity here that shows that we are no longer interested in the upside, but rather we have to proceed to the what? To the downside. Okay, let me ask you a question. You have a break of structure here. Market is here. If you have to use this language that I have used here, what will you call it? What will you call it? It's a discount. It's a discount. But the trend is what?
It's bearish.
The trend is bearish, but the market is at discounted level because it's below the break of structure. Is somebody not getting it? We are doing analysis. We are not doing teaching per se. Look at it. You have this, you have this, you have this. Even though this market is bearish, as soon as you have your break of structure here, anything below this level of break of structure is a discounted level. Somebody will say, how do I get that? If you take your fib from this level to this level, excuse me, this is below 50. Is that correct now? It is below 50. Therefore, it is discount. but the trend is bearish. So if I have such situation, what I have is what is a discount bearish market, a discounted bearish market. And if I have a discounted bearish market, it means that if I have opportunity to buy for a pullback, I will buy, but I will be more careful because I am not within the dominant direction. So from this level, if I see opportunity on lower time frame, I'm going to buy, because I believe you guys understand what is called mean reversion, right? I believe you understand what is called mean reversion. If you don't understand what is called mean reversion, please just go and study mean reversion. Go and Google it, mean reversion. Google will tell you what it means. So this must revert back to the mean, and the process of reverting back to the mean is what will make us to buy it as if it's a bullish, as if the trend has turned bullish. No, you get what I'm saying now? So now, if I have that here settled here, I've seen liquidity to show that on the higher time frame I must start looking for sell opportunity. What do? I go to my analysis time frame. What do I want to see? I want to see structure. We did this last week, right? Structure. Am I correct? Structure. Yes, we want to see structure. You see, you make use of these tools. They are there for you. Structures. 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 Can you see that where the market, indicated that it had enough liquidity for a sell? If you look at it truly, you see that you have taken some form of what? Internal structure liquidity here. Boom. You have taken it to the upside. Do you get now? So right now, at this level, my structure is complete on my analysis time frame. Is complete. And what was the time that my structure was complete? London, New York overlap, which is fantastic for me, guys. Fantastic. So as soon as I get this on my analysis time frame, I am able to define the appropriate level appropriate level or boundary to which I do not expect market or price to tap or break in the future. So after this is done and I'm satisfied with this, I need to now look. This is not just to tell me that, or this is just orange light. You know orange light? When you are driving, you have the green light, you have the orange, right? And you have the red. You have the red. Okay? This is acting like an orange light. Get ready for trading. Get ready to sell. Get ready. If I have to sell, I'll go to my either 1 minute or 5 minutes. Either of the two we do. I'll go there. Okay? What do I want to check? I want to check for efficiency. Either 1 minute or 5 minutes. Anyone that is okay for you. I want to check for what? Market efficiency. Excuse me, can you have market efficiency without structure? No. You can't have an efficient market without structure. And if you read the book I gave you on international economics, if you read it very well, you should read chapter 15. You will see efficiency of foreign exchange market. Efficiency of foreign exchange market. I do not give you that book for a fluke. I want you to understand the market that you are trading. This market is not meant for amateur. No. This market are not meant for lazy people. No. This market is not what you pick from the streets and you think you will trade it profitably. No. You have to engage your brain. You have to study. You have to read. You have to understand what drives the market. You have to understand what the market is and what the market is not. That's why I gave you The hardworking ones, I know they will go through it. They will read it. Efficiency of foreign exchange market. And I've told you, without liquidity, you can't have efficiency. And once you have efficiency, efficiency gives room for participants to enter the market and exit the market. Efficiency allows for adequate information to be available both to the buyers and to the sellers. So, and if both buyers and sellers have enough information about the asset, no one is cheating the other. The price is known. There is not going to be, any form of cheating. That is what efficiency does for you. And excuse me, sir, an upgraded version of the course we have prepared now make efficiency as a criteria for trade entry. If a market is assumed to have tapped liquidity and such market does not have efficiency thereafter, then that liquidity is fake. It is not liquidity. Because what should be a proof of optimal liquidity in the market is market efficiency, and there cannot be market efficiency without market structure. Okay, that's why you have this, boom, you have this, you now have all this. Go and check what I taught you about premium price action at demand. This market seems to have mitigated a demand zone here, okay, and it reacted from there. This is a reaction, and after this reaction you have this consolidation and market broke to the downside. Breaking to the downside means an intention to sell, okay? And when you have this, I already gave you a markup yesterday that this is not a demand zone. This is not a demand zone. Why is this level? This is how I normally put it, interpret it for you, represent it for you on the group. Why is it that this is not a demand zone? Because we did not have a break of structure to the upside, for which below here will have been our inducement. For that reason, then we have disqualified this as a demand zone. This is not a demand zone. I tell you, what we trade here is not strategy. It is real market analysis, not strategy, not demand and supply, not smart money concept, not ICT. No. Real market analysis. Because when the pattern is, is represented on the chart, you already know what will happen next, because we have developed adequate theory that supports those patterns and behavior of price. So if this is not a demand zone, then above should be a supply zone. It's as simple as that. This should be a supply zone. But I told you something, that the problem with this setup is that you do not know the extent to which this mitigation will happen. That is my problem with it. If you remember, I said it in the group yesterday. You cannot predict with a measure of accuracy the level of mitigation, the level at which this market will mitigate. Okay? Now, market came and mitigated above here. All right? Sometimes it will mitigate at 50% fifth level here, especially if it is a fake flag. If it is happening at the top, if it's happening at the top here, if it's a fake flag formation, it will mitigate at 50%. But this, is acting more or less like a weak supply concept, because if you look at it this way, you have support here, turn resistance. All we need is to take that support, turn resistance to the upside. Of course, this is average price. Take it up to the upside. Once you take it up to the upside, you can now begin to look for sell opportunity. We have taken it up here. We took it up. We took the inducement, the weak supply, the average price. We cleared them to the upside. Then from here, I want to see structure. Can you see? Stage by stage, step by step. I have the down, the up, the down. Okay? This is what is sold to us. Not many people know that when you come to the Forex market, all you want to buy is structure. And if you want to sell, what you want to sell is structure. Is structure. That is the product. If you say it's EURUSD, you want to buy, you want to sell. In the form of what? Guys, in the form of structure. Structure. That's what we are selling and we are buying here. Now, you have seen the structure here. Okay? Now, can I just sell at any point? No. A structure is represented this way. You have the down, you have the up, you have the down. This is when you have a structure. It is after you have had this that you can now determine where do you want to enter. Where is the appropriate level to enter? This takes us to trend analysis. Where is your supply here? Okay, is it this level? Is it this level that's your supply? Or this level? We don't guess it, ladies and gentlemen. We don't guess it. We use trend analysis, making use of our understanding of divergency and convergency. So look at the structure here. I turn to my indicator. I have the low. Right here, I have the low. I have the lower low. Right here, I have the low. I have the lower low. If you have the low and the lower low on the structure, that is on the price, and you have the low and the lower low on the indicator, what does it indicate? This is a convergence. And if you have a convergence like that, it means that here, this level that's supposed to be your inducement has become your supply zone. Why is it a supply zone? Because the third eye of the market, which is the divergence, is telling us that the second push here has more volume and more pressure than the first push. So if it has more pressure than the first push, then the beginning of that level must be your supply zone, not above, because above has become irrelevant now. But guys, if you are having something like this, low, lower low, low, higher low, this is a divergence. This cannot be your supply zone. We have to break it to the upside. Do you understand what I'm saying now? So that is the basis for which I now gave you this trade. Boom, from here, put your stop loss just above here, and then let us come down. Let it come down to the downside. You made how many pips? You made something in the about 37 pips. All right, and I now made a push to the upside. Of course, you know that in the next 2 days, Donald Trump will be sworn in as the next president of America. And of course, you know who he is. He's business inclined. There's going to be a lot of volatility. There may be gap. There may be all sorts of things from now till Monday. So that's why you saw that this market has to induce again when it didn't get enough volume to push to the upside. All right. But does this invalidate the sell setup? No. The sell setup is still there. What it does means is that all this that we use, all this level that we use as supply before has now turned to inducement. It has now turned to inducement because adequate volume is not available there to push the market to the downside. Now we have induced it. Now somebody will ask me, as we have induced it, is this place the right place to now strike for the sell? Boom, boom. This is 75. Are we now just supposed to sell here? No, because right here, what have you done? Liquidity. You have come to tap liquidity. Because if all these levels are fake supply, then there must be original supply right here. So if you have tapped liquidity here, is it at the point of tapping liquidity that you are supposed to get in for a sell? No. You must confirm that the liquidity you tap is a real liquidity. And how do you confirm that liquidity? You must see market efficiency thereafter. You must see market must be calm and not volatile. If you read the book I gave you, if you read about efficiency of foreign exchange market, you will see that when there is when there is liquidity in the system, then you will see that prices becomes calm. All right, prices becomes predetermined. You can determine it. Okay, you can guess when you want to come in and when you want to go out. That is efficiency, and that is what I make use of in my entry techniques. Is that okay now? So you have this already. Is this enough for you to get in for a trade?
No.
Is it enough? No, it's not enough. So market can give you something like this. Break here. You have break of structure. If you test it and you have a convergence, this second leg is good, and you don't have inducement in between, what should you expect to get in? Weak supply. Take it away. Support on resistance. Take it away. Fake out. All strategy trader, take them out. Take them out. Support on resistance. Take them out. And if is this pattern that you see, I will tell you, smart money concept people, how we take them out. If you have this and you have this, do you see it? This is how we take out the smart money concept people. Listen to me carefully. You have break of structure here. This is support on resistance. But how did this market comes to the, and this is your supply, sorry, this is your supply zone. You have tested it, everything aligned, you have a convergence, you have everything. But right here, you have support on resistance here, which is an average price. Right now the market is above average. Is that not correct? Is that not correct?
It is.
But I will tell you how we take out all the strategy traders. After we have taken them out and they are crying, that's when we get in. If this market that mitigate it, that originated from the low here, comes straight to the upside like this one, without any noticeable reaction at the average price. If it comes straight to your level of supply, excuse me, this is developing trap. It's developing what? It's developing the price is developing a structure to trap you. And every person who is a demand and supply trader will trade here. Of course, people that trade support and resistance, they are dead here already. They are dead, buried. People that trade smart money concept, they say, it's here. They will sell here. They are gone. I have taught you before. If this market moves straight to the supply zone without reacting at the average price, excuse me, it's not going to work. This become a trap. This will come down a little, go back here before it goes down. Okay? This going up here, kill all the strategy trader right here. They are gone. And after that, you're going to have your sell right here. So these are things that you should know when you are studying the market for efficiency. These are things you should know. Sometimes your efficiency can come this way, guys. Can come this way. Can come right here, right here, right here, right here, right here. Take it up here, break it down here. Okay? You already know that every form of liquidity to the upside is already cleared here. And if it is already cleared, then this level become the boundary. This market will never cross this level. And if it is so, as we break the structure to the downside, okay, do you have inducement? No. So you should expect market to develop average by coming to support, turn, resistance. React from there, take this out in the form of weak supply, and for the purpose of development of internal structure liquidity. When it comes here, right here, boom, you take it to the downside. This is how we do it. It's as simple as that, guys. It's as simple as that. So this is the thought process behind EURUSD. Then I have for gold. I have to show you for gold. First thing, you are a day trader, take it to 4 hours. Check what is going on here. Okay, if you check the structure, see, I've told you time without number, market sectionalization. You go to the course, if you subscribe to the course, you will see it there. There are a lot of things in that course that I did not teach in the mentorship, and I have my reason. So you do yourself well by subscribing to it and know what is there. Some people think I want to sell because I want to sell course. No. When I developed the course, I was in a frame of mind that is different from the one I have when I'm teaching you here. So there are many things I explain in detail in the course for which time will not permit to explain such in a discussion like this. So you need to compare the two, understand the theory, and apart from that, you need to have the course, the trading system in a sequential order that you can easily make reference to. That's the advantage. All right, and I don't think I will say more than that. So now, when you sectionalize this market, you now see that on this part right here, you have a bullish trend. Okay, now you look at it this way. Of course, you see weak demand taken here. You see this, you see this, you see this, you see this, you see this. So where are we?
At premium.
We have premium. We have premium in the bullish market. We at what? We at premium. I'll tell you why I so do. We at what? We at premium in a bullish market. We are at premium. So the normal thing for us to do is to allow this market to come back, revert back to the average before we can even contemplate thinking of buying gold. You know, we want to buy. Because at this point, I told you, anytime you have a break of structure like this, above that break of structure here, you are at premium. You are at what? You are at premium. You can no longer be looking for buy. Look at here. As soon as you break structure here, you are at premium. You can no longer be looking for buy. Your buy will go a little and sell more. We go a little and sell more. That's what it means. And this is where we derive the formula for divergence. Okay? For divergence, when market is diverging, it means that the rate at which is going up in a bullish market, if there is divergence, the rate at which is going up is smaller than the rate at which it wants to come down. Do you understand? So when you see situation like that, even if you see a buy setup, you can't hold it for long. You hold it for a short period of time. That's how it is. So now, what did I want here? What I wanted here is simple. What I wanted is simple. As I was having a bearish setup for EU, for GU, and all those things, and gold is already giving me what do you call it? A premium level in a discounted, in a bullish market. I felt that there was need to sell gold, you know, to the discount. All right, and if you have such insinuation, you have such bias, you must see a confirmation on the lower time frame that you can actually sell this to the downside. If such confirmation does not exist, excuse me, you can't proceed. No, you cannot proceed. That confirmation must be there. So what did I do? I went to my analysis time frame. That 30 minutes or 15 minutes will be fine. What did I do? I said, okay, do I have structure that can give me a sell? Do I have structure that can give me a sell? Look at it. Let's take this out. I have this. 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 What do I have there? What have I done? I have taken inducement out. Right? And after I took the inducement out, what did I do? I broke structure. Simple. This is what I wanted. I broke structure. Now, if you do your structure mapping here, you have this level, you have this level, you have this level, and then you have this level. Okay? Now, watch. Look at your structure right here. Look at your structure. Boom, boom, and boom. This is your structure. I told you, without structure, You are playing. This is your structure. Every structure that is seen in the market must be validated. Okay, you must validate it with your RSI, with divergence. If you don't validate it, you will not know where the real supply is. That is the essence of validation. Where the real supply is. In the case of buy, where is the real demand? If you have a buy structure like this, where is the real demand? Is it this level or this level? This is why you test your structure. Okay? So by testing this bearish structure, I have seen that, oh, beautiful. I have low, I have lower low. I have low, I have lower low. Oh, this is a bearish market. All right? And this level here becomes my supply zone. This is the reason why I gave you a sell for good right here. And you see that it sold for just 83 pips. I know some people must have taken profit. Myself, I was able to close a little, but we wanted to sell it for mean reversion. We want to take a mean reversion trade. We want to trade it to the mean. We want to trade it back to the mean. Trade it back to the discount. That was what we wanted to do. Is that okay now? So now, right here, I have my structure complete on my analysis time frame. I need to get in. I need to enter. I need to enter now. I need to enter now. You see that I gave you the setup only when this market, only when this one came. When this one came this way, I gave you. Say we can sell. We can sell from here. All right. This level we can sell. Stop loss here, and then we extend it to the downside. Unfortunately, it sold small, 83 pips, and then it went back to the upside. Does it mean that our bearish bias is of no effect again? No way. The only thing that will make us not to be able to say that this market will continue to go bearish is that we will have a major event in US on Monday, which is the swearing in of the next president of the United States. That will significantly impact the market, especially commodity market. All right, it will impact it. I'm telling you, it will impact it. All right, especially for Donald Trump, that is business-oriented president, it will impact it. So we've got to be very careful with the way we approach the market next week, especially Monday and Tuesday. You have to be calm. You have to be calculative in terms of your risk application. You have to be very, very careful and make sure you protect your capital. So this was the thought process for gold. Okay, of course, the same analysis for EURUSD was the same analysis for GBP USD. You agree with me? Some people will say, oh, if you have this structure this way, bam, bam, boom, boom, boom. This leg here, some people will argue that from this level to this level, this market is at discount. Is that correct? That would be the argument, that this will be the level where we should be looking for sell. Yes, you are not wrong. You are not wrong at all. But one thing you should know is that if market is doing a pullback, it has rights at any point to develop liquidity to inform you that the pullback is over. That the pullback is over. And the same thing it did on EU, it has done here. Sharp up, sharp down. This is a sign of liquidity. And from here, we can proceed to check the structure. And you can see that the structure is a balanced structure. It's a balanced structure. Average price, reacted from average price. What I tell you, when you have market reacting straight from average price like this, that is a fantastic market. Can you see? Mitigation. Okay? Coming to mitigate at 90. So at this point in time, ladies and gentlemen, we have a balanced structure that reflects the bias we had on the higher time frame. But now, what of the entry? 1 minute or 5 minutes, anyone you like is cool. Okay, now the structure right from here, we do not see structure for entry. Can you see? We do not see. If we had seen structure for entry here, all this one would not have happened. But because there was no structure for entry, instead what we had was this boom, pullback, this. As all this were happening, to break structure with this kind of price action is a build-up of inducement that will be cleared. This is the inducement that was cleared. Can you see? Right here, weak supply taking. But does that make me to sell here directly? No. Why? I don't know the extent, whether it will stop here or this level or this level. I don't know. But all I know is that in as much as you have taken this weak supply level to the upside, you can decide to turn anywhere. And the sign that will show me that you have turned is when you develop efficiency for me. Okay, that's why the market gave this, this, and this. What have I seen here? I've seen structure. Okay, structure. I need to test my structure. Right here, I see the low, I see the lower low, I see the low, I see the lower low. This is a fantastic convergent structure. And if it's a fantastic convergent structure, upper side here should be our supply. Okay, now right here you have the breakdown, you have this. I took this trade, I took it for the purpose of closing it at this level, because I know that two things will happen. It is either it will continue to go like that, or it will develop average price, come to take it and go. One of the two will happen. All right, and the reason why I took it here is that I was thinking that it is possible that after this breakdown, all this one will have constituted an average price for me. That this is the one that took it. Hello, are you getting me now? Are you getting me?
Yes, sir.
This is the one that I took it. So
Yes,
based
sir.
on that, I took my entry here. Boom. Stop loss here, and then to the downside. Okay? But after this 1 to 3, unfortunately, he used this place as what? As a weak level. So that weak level must be taken. That's what you see here. Boom. Boom to the upside. All right? And after taking this weak level, it has to now proceed to the downside. This is how it works, guys. Proceed to the downside. All right? Do we have any question, guys? Do you have any question? This is trend. This is how you analyze the market with trend.
Hi, sir.
Yeah.
Hi. Can I ask for gold? Because for just now what you have explained, for at the price, do you think that it's a good price to sell again? Because there's a structure present already, three wave, and then from the bottom, and then currently it went up and break the fake supply, and then to the actual three-wave structure of the inducement supply level. And then according to the RSI, everything goes aligned to the downside also.
Yeah.
So can you see whether what I say is correct?
Yeah. Yeah, I can hear you loud and clear. Well, right now the time is gone. London is closed. You have only New York in the market right now, and today is a Friday, so it is not wise to look for sell again. The time is gone.
Okay, I understand.
I don't know the time you are right now in. Is it Singapore now or?
Yes.
Singapore, right?
It's 1 a.m.
Oh, 1 a.m. in Singapore right now.
Yes.
Whoa. All right, so you cannot look for sell again based on this reasons that I've advanced. Moreover, our market, this market is still a bullish market. Remember, it's still a bullish market. There is nothing here to suggest that the market is to go bearish. We're only using a kind of idea that this market should, if you see a bearish structure in our analysis time frame, we could sell down. Okay? Although that's not the best practice. That is not the best practice. And I think I should have done that privately. I shouldn't have introduced that to you, because that is number one reason why traders lose. Your experience must get to a certain level before you can trade that way. All right, your experience must get to a certain level. Okay, you must be able to read your analysis time frame correctly, as to be able to identify the structure that reflects a bearish move, which is the bias you have. Do you see that even despite the fact that we had a correct structure on our analysis time frame, it just gave us little joy and reversed. Gave us little joy and then reversed. We just saw the profit. I saw my profits, was up massively. Before you know it, it reduced to half. I had to struggle to close some of those trades. Do you understand me? So right now, it is not advisable for you to look for sell. No. Aside the fact that there's going to be a major fundamental event on Monday, it is not advisable. Do not buy gold and do not sell. It is bullish, but it is at premium. What does it mean? It means that though the market is bullish overall, but at the level it is now, those that hold it, that need quick profit, can release it. Release it because it's begging for retracement right now. And you can confirm with RSI. I did not even put RSI before I concluded that it should retrace. But if you look at it right here, look at the top here, look at the top, higher high. Look at it here, lower high. You get it now? Higher high, lower high. What does it mean? Divergence. Which means that the rate at which this market price is going up is low. It's going at a slower rate than it used to be. That means that volume is no longer there. And at that point, we need a retracement. And then why will retracement not come when we have already broken above the structure to the upside, knowing fully that anytime you break structure to the upside, you are now at premium. Market is at liberty to reverse or to pull back. So that was the reason why I told you that when you see a break of structure in a bullish market, check a big candle that have imbalance. The other block that sponsored that big candle with imbalance is likely going to be your demand zone. I taught you that last week. This is how you analyze the market. This is how you analyze the market. Don't just come to the market and be doing guesswork. No. You can see that most of the things I give you, most of the setup I give you, this is what you do, this is what will happen, this is what will happen, this is what will happen. Is that not how it happened? That's how it happened. Yeah. Why? It is based on detailed analysis, just as I'm teaching you now. And everything overall is based on trend. That's why I wrote that you should not allow anybody to deceive you. Stop pursuing strategy. Market is trend. You are trading trend. Okay? And then if you know how to position yourself to know where the trend is, to know where you are within the framework of the trend, you'll be a successful trader. You'll be a successful trader. Right now, we are at the premium of a bullish market. Okay? So the normal thing for us to do is to allow this market to come down, to discount, and look for buy again. And if you want to reverse, the rate at which it will come to the discount will be more aggressive. If it's too aggressive, then you'll be careful looking for buy from here, except if it has developed inducement here that is clearing. Okay? So that's how it is. Do you understand now?
Yes, sir.
All right. Another question?
Yes, sir.
Yeah.
Okay, sir, yesterday,
Yeah.
BTC got to a higher time frame demand level yesterday, and then continued the move up from there without necessarily us finding structure on analysis time frame. Now, is there a rule that can enable us trade it straight up without necessarily waiting for analysis time frame structure?
I don't know how you want to trade without analysis time frame structure. I don't think it's possible.
No, looking at what happened yesterday with BTC.
Okay, now
the higher time frame.
Now, if you look at all this that happened, okay, this market supposed to what? Supposed to sell. Why? Right here, you have all this as inducement. Market clears it, but does not mitigate any demand. And then this move to the downside, let me make it clear for you. This move to the downside creates an average price right here. Can you see? And this price is taken. Boom. This is a supply. But what do you notice? This supply is not adequate to break this structure to the downside. Rather, it gave you this in form of what? Liquidity sweep. This alone is informing us that this market is going to go to the upside from here. To go and do what? To go and clear this level. Why must it clear this level? Because it is incapable of breaking structure. So if it is incapable of breaking structure, it means that it is a weak level. Hello? That's the definition.
Yeah.
When you are seeing a move that is incapable of breaking structure, it is a weak, is emanating from a weak level. So such level must be taken to the upside. That's why BTC is taking it to the upside. Do you understand? Now your question is this: that is there a way that you should have taken it yesterday? See what I would do. Are you getting me now?
Yes, sir.
I say everything you are trading in the market is what? Trend.
Trend.
Hear me well, trend. If I had wanted to trade BTC, this is the structure. Boom, boom. On this time frame, this is what you just do. You are not looking for structure mapping. How does it push up, retreat, push up, retreat? That's what you are calculating. Look at it. Excuse me, if I drop this one for you without you looking at the market, is this not a trend?
It is.
Why are you then worrying yourself? If you have this this way, I told you, you break structure here. You break structure here. Okay? Is that not correct? So now you break structure. Look at the big candle. You break structure there. Other block. Okay? Look at it. Other block. You break structure here. Look at the big candle. Look at the indecision beside it. Other block. You see it now? Good. Now, right here, I will not have gotten any opportunity from here to the upside. No opportunity at all. No, none. But when it breaks structure here, give me this, I have opportunity here. Now, watch you. Watch. This is where I want to have a bias for the upside. What will I do? I want to study the structure. What is the structure? Does it give me structure? How did it proceed to the upside? How did it come back? That's what is called structure. When you say structure, how does it go up? Or how did it go up? And how did it come down to your demand zone? That's what you want to study. Okay, remove this. Alright? Remove this. How did it go up? I told you, market can go up in two ways. when it's breaking structure? 2 ways. Who can remind me the 2 ways?
Mono wave and 3 wave.
Either it goes in 3 waves or it goes in mono wave. Yes, correct. Correct. That's the only way. If it goes in mono wave, there is no 2 other way by which it will come back other than weak supply, weak demand. If it goes in 3 waves, you have to go and carry out a test. A test. What is the test? To find out whether here is your demand or this level is your demand. So you know how to do that. All right. If you don't know how to do that, go and watch the content. Okay, right here. How many waves do we have?
3. 3, sir. 3.
If you say 3, you are correct. If you also say 1, you are correct, because the psychology with which it took off from here is meant to develop 1. But the process of it to come back was what made it to develop all this you see here. So if you say 3, you are also correct. All right. So if you have 3 here, right here, you have what do I say you should do? You have to test the structure if you have 3. Is that not what I told you? You have to test the structure. Yes. Why do you want to test the structure? We want to know whether this level is our demand or this level is our demand. So right here, you have a high. Right here, you have a high. You have a higher high. You have a high. You have a lower high. What is this? What is this, guy? Higher high here.
Divergent.
Lower high.
Divergent.
So because you have a divergence, it means that the second leg here, which emanates from this level, is weak. It has a weak order block. So that must be taken to the downside in order to mitigate original demand. And that coincides with our 4 hours demand zone. You have this, react from here, and this. This is your demand zone. You are done with your analysis time frame. For those that know how to take risks, they can enter directly, put stop loss here. For some of us that want to refine it further, we now go to 1 minute or 5 minutes as the case may be, and begin to study for market efficiency. We want to begin to study market efficiency. The only thing there is that if you are using this, you are not going to have opportunity of entering the market from the beginning, but your win rate will be higher. Your win rate will be what? Higher, because you are careful. Look at it here. You have up, you have this, you have this, you have this, you have break of structure here. Okay? This is where you have what? Break of structure. Am I making sense now?
Yes, sir.
Now, your break of structure, you have here, higher high, you have here, you have higher high. Is that okay?
Yes.
You have high, higher high, high, higher high. So what does it mean? You don't need to come down here. That this structure is telling you that this is your demand. I'm not faking anything, guys. This is theory, and it's working like fire. The other time that I showed you, what did he tell us? He said your demand is down, down, down. Okay? Before, it was telling us that the origin order block or extreme order block was our demand, because we tested it with divergence. But this time around, it's telling us that no, you do not have a divergence, guys. You have a convergence. Therefore, the order block of the second leg becomes your demand. That's why this market must be bought from here. Stop loss right here, and you extend it to the upside. This will have been, if I had wanted to trade BTC, this will have been my trade yesterday. This is how you will have caught BTC to the upside. Is that okay now?
Yes, sir.
You can see the thought process. It's a process. Trading is a process. Just take it systematically like that. Don't fake it. Be original. All right? Be original. When I come to the market, I want to approach the market like a general in the army. A general in the army who is leading a battalion is prepared. He has every information he needs. He has all equipment at his disposal. He has all the knowledge. All he needs now is to begin to shoot the enemy one after the other. When you have armed yourself enough, you will shoot without missing most of the time. Okay? And then the process of deployment is methodical. When you are deploying your troops, you are deploying your army for battle. The logistic is systematic. It's a process. You don't compromise it. That is what we do here in trading. When we want to trade, we take it as a process that must not be compromised. If RSI is telling me something, I don't go against it because he's seeing the market better than I do. What I see in your own eye now, with the way you are seeing the market, if I tell you that this move right here, this move right here and this move right here, which one is stronger? Which one will you say? Which one will you say? The first one or the second one?
The first one.
You will say
one.
the first one is the stronger. But the RSI is saying no. The first one is not the stronger. It is the second one that is the stronger out of the two. So that's why I keep telling you that the third eye of the market is RSI. He sees better than you. What you don't see, he's seeing. Okay? He's seeing. And it is on that basis that we took decision to buy from here. So what I do is to continually implement my system the way it has been instituted. Sometimes I lose, sometimes I win, but I win more than I lose, and my risk to reward ratio is fantastic. This is why I am a consistently profitable trader. You want to be a consistently profitable trader, consistently implement the system that you understand. All right? Implement it consistently. At every point in time, you have the weapon to test whether what you are doing is right or wrong. If you see a structure, I have taught you methodology to test the structure. If you see a liquidity, I have taught you the methodology to test for liquidity. If you see a demand zone or supply zone, I have taught you the methodology to test whether that demand or supply zone is valid or invalid. That is market analysis for me. So if you know how to test for trend, you know how to test for liquidity, you know how to test for demand and supply, what are you looking for? You have no reason to fail. Everything becomes simplified. All right? And that is why every 10 things I tell you about the market, 8 or 9 is correct. It will do 8 or 9 correctly. Maybe I will miss one, maybe, or 2 or 3, because I'm not perfect. I'm not perfect. If I'm perfect, I should not be losing. I should be winning all my trade 100%. There was a time I was so stupid that I said I wanted to win 100 trades, consistently. When I got to number 34, you could remember, you could recall USD card. When I got to number 34, I lost. And at that point, I lost interest. That if I'm going to 100, I just got 34. I have failed. For that reason, I was not going to continue the project. All right? And I told myself, let me know from the onset that I'm not a perfect trader. I think God used that to help me. Because if I had done 100 without losing, I may have become overconfident. And that overconfidence can mar a fantastic trader. I think that was a blessing in disguise. So do not be afraid to trade. Follow the process and I have instituted it. Follow it. So when you see that they meet up with the requirement, apply minimum risk, that if you lose that trade by mistake, it's not going to damage your account. Apply it, extend your TP, allow it to run. Allow it to run. That is all. I hope I'm making sense, guys.
Yes, sir.
So trading is not all about technical. There are times that I will need to talk to you. I need to speak with you. You have to behave like a general. You don't have to be afraid. Have you seen any general that is going to war and is afraid? Every general will motivate himself, motivate his tool, sharpen his arsenal, and make sure that they are top notch to confront the battle, to confront the enemies. So when you wake up in the morning, that is how you should behave. You should confront the market. You should speak of the market with authority. You should behave as if you are part and parcel of price mover. And what makes you part and parcel of price mover is the virtue that is in you, is the knowledge that is upstairs. How do you think we speak of the market authoritatively and whatever we say happen? It's not that we see the back end. It's because of the knowledge. So you too, you also have the knowledge. So come to the market, wake up in the morning, sharpen your brain, sharpen everything, sharpen your arsenal, come over here, exercise your authority over the market by exercising knowledge, display knowledge, and be a smart guy. That's all. All right? So.
All right, sir. Yeah. Okay, lastly.
Yes.
Okay, this is it's still on this BTC. It's a case where the demand zone for higher time frame coincide with analysis time frame.
Yes.
So that's why we can apply direct execution from there.
I said yes. For risk taker, they can go direct here. But most of the time, I don't go direct. Because if you go directly here, you have liquidity here already. You have taken liquidity here. All right? And what is the evidence to show that you have truly captured liquidity here? And by the way, what do you mean by the liquidity here? I know some of you will say that the stop losses are taken. That is an amateur way of reasoning. That is a roadside way of reasoning. So when you pick Forex from the roadside, you will reason that way. There's nothing like stop loss. Anybody's stop loss is taken. Market is buying from here because the price has come lower relative to the trend. Price has come lower relative to the trend. Because of that, many investors have found it very good to buy. They now put their money in. When I put my money, when I inject my fund to buy, you inject your fund to buy, the other person inject his money to, his fund to buy. What happened for an asset that people are looking for? What happened to the value of that asset? It's going to rise.
Whoa.
It's going to go up. Whoa. That's what you see is making this to go up, because market has found this level where investors have found it appropriate enough to buy. That's what is pushing it up. The sentiment of the market is favoring to buy because the price is cheap. This is what is called liquidity. But I am saying that despite the fact that market has hit my demand and I've seen liquidity, there is a way I will confirm that the liquidity that is hit here is a valid liquidity. And one way of confirming it is by understanding market efficiency after liquidity. And if you study the content I gave you on foreign exchange market, efficiency of foreign exchange market, you will see that when there is adequate injection of fund into the market, there is calmness in price. Price flow determinatively. All right? You can determine price. You can forecast where. Okay? Participants can come into the market easily and go out of the market easily, because at that point in time, there is nothing in the market that is hidden to anybody again. That's what is called information symmetry. All right? That's what is called information symmetry. Everybody understands perfectly what is happening in the market. Nothing is hidden for anybody. So you can't manipulate price. You cannot at that level. So that is why we wait. Look at where you should have entered if you have, if you had wanted to risk this. But we are saying that we want to see efficiency after liquidity. That's why we are entering here. It's simple. So the difference between the two is that you here, you are a risk taker. Sometimes it will take you out if the market wants to go bearish. Then, if you have a bigger risk, you cry in silence. If you have a lower risk, it's just one of those things. But we want to ensure that if this has happened, this efficiency has happened after liquidity is confirmed here. After liquidity here, then we know that that liquidity is real and this market is on its way to break the upside. Forget that we are catching it here. Sometimes it will just be here. Boom, right here. Sometimes it will be this level that you catch it. Stop loss here and then up you go. Guys, simple. Now, you now ask me, okay, what next? Because I like to discuss what next. All right? So that it will not look as if we are analyzing a market that I already played. What next? Okay? If you go back to your 1 hour or your 4 hours, you can see that it's still bullish. Now, we don't have a bearish bias. And if you draw your structure, as I drew it that time, like this. Now, we are at a premium in a bullish market. What do I say? This is how I reason. This is how I do it. I use that language for you every time. This is how I do it. We are in a premium in a bullish market, which means that you cannot buy. It becomes forbidding. It becomes an abomination for you to buy a market that is at a premium of a bullish market. And how do you define a premium of a bullish market? Because you have had a break of structure to the upside. And at a point that you have the break of structure to the upside, you are already at premium. And it becomes impossible for you to buy. If you see a buy setup, you must not stay there long. It must be a very short setup. It must be a scalping setup. I told you something like that the other time, that I was scalping. Why? Because I was not in the position where I was supposed to buy. That was why I used the word scalping for you. I'll just get in and get out. Are you getting me now? So, right now, you already had a break of structure. Right here, I can see demand here. I can see demand here. Okay? I can see a slowdown here. I can see a slowdown here. You have a big candle. If this candle closes this way, then you have a possible demand here. You have a possible demand here. Hear me well. How will you now determine whether it is this demand that will follow or this demand? Good. You will know that from your analysis time frame. Does it develop structure for mitigation here or it develop structure for mitigation here? For instance, if it comes like this, if it comes straight like this, the first move that's making average price is now coinciding with this. Then you know that you are coming here because this one will go like this and come like this. Then this is where you now take your demand. But excuse me, if it doesn't happen like that, but comes like this, and come like this, then you know this is your demand. Then from this level, you see that liquidity is attained. You now look for efficiency from there on your entry time frame and enter to the upside. You enter from here, entry here, stop loss right here. How do you project your TP from this level to this level? Target minus 0.27 or minus 0.62. Any of the two. 1 to 8 risk to reward. Straight off. This is the thought process. This is how I do it. This is how I shoot without missing. Most of the time. You get it now? We have spent 1 hour 28 minutes. And I think we should end the session now. Okay? So I hope we have gained value from today's lesson. Is market analysis all the way. If you want to learn more about the theory, you go and subscribe to the course. You see the theory there. Go and learn the theory. But this year, we're not going to discuss any theory right here on this channel. We are going to discuss market analysis. Just market analysis. So if we are discussing the market analysis and you are not understanding us properly, it then means that you have not had adequate grasp of what the theory says, which means you have to go back to the course. All right? And there are a lot of updates that have been done to the course. You have advanced technical analysis. I hope you guys have access to it already. Those that are subscribers. Right?
Yes,
correct.
Yes,
so
yes,
you see how I've detailed everything right here. So you want to understand theory, go back to the course. But right here, it's not time to discuss theory. It is time for application of the theory in real market analysis. Is that okay now? So I see you next time, guys. Have a lovely weekend. Bye-bye.